Ladies and gentlemen, good day and welcome to Q2 FY23 earnings conference call of Solar Industries India Limited, hosted by Centrum Broking Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Chirag Muchala from Centrum Broking Limited. Thank you, and over to you.
Thank you, Yashashri. On behalf of Centrum Broking, I welcome you all to the Q2 FY23 earnings conference call of Solar Industries India Limited. From the management, we have Mr. Manish Nuwal, CEO and MD, Mr. Suresh Menon, Executive Director, Mr. Monish Agarwal, Joint CFO, and Ms. Shalini Mandhana, Joint CFO. I now hand over the call to management for their opening remarks, post which we can open the floor for Q&A. Over to you, sir.
A very good morning to our dear stakeholders and well-wishers. I hope everyone had a fantastic and safe Diwali. Indeed, this year's Diwali is over, but we are here to celebrate it again with our stakeholders as we present to you our sparkling numbers in today's conference call of Solar Industries India Limited. My name is Akhil, and I would like to welcome you all to the second quarter and half-yearly investor conference call for the year FY23. To begin with, I would like to remind you that during this call, we might make projections or other forward-looking statements regarding future events and about the future financial performance of the company. Please remember that such statements are only predictions. Actual events or results may differ materially, and our website will be updated with all the relevant information timely. Now I would request Solar's CEO and MD, Mr. Manish Nuwal, for his opening remarks. Over to you, sir.
Thank you, Akhil. A very good morning and season's greetings to all the stakeholders and our well-wishers. With strong performance across all the sectors, we are delighted to share that we have delivered yet another quarter of all-around performance with quarterly revenue up by 99% year-on-year, which stands at 1567 crores, and the net profit is up by massive 152% year-on-year, which stands at 189 crores. Friends, our strategy to nurture overseas businesses, expand in non-coal India market, and defense continues to boost our performances. Export and overseas business has outperformed by showing a growth of 107% year-on-year. Defense business has achieved another milestone by crossing 100 crores in this quarter. Now, after establishing ourselves in Indian ammunition market, export opportunities are providing us a new avenue of growth, and we are the first private sector company in India to receive an export order for ready-to-use ammunition worth rupees 300 crores. We all are aware of geopolitical tensions, shortages of raw materials, high inflation leading to higher interest rates by banks across the globe, resulting into volatility in currency, and concerns of economic slowdown are triggering major challenges for all of us. Despite of these challenges, half-yearly results, along with the strong order book of 4,000 crores plus, which includes defense orders of rupees 885 crores, gives us a strong confidence to revise our annual revenue growth for financial year 22-23 from 30% to around 50%. Now I will hand over the call to Aanchal to take you through the financial details. Thank you.
Thank you so much, sir. Let's begin the numbers. The consolidated revenue is up by 99%, that is 1567 crores versus 788 crores. Explosives revenue is up by 90%. Realization of explosives has increased by almost 73%, that is 7,900 versus 40,874. Initiating system revenue increased by 50%. Coal India percent as a revenue stand at 13% compared to 15%, whereas revenues increased by 67% year-on-year to 198 crores from 118 crores. Non-CRM institutional is up by 206% year-on-year to 267 crores, which is 89 crores. Housing and infra, the revenue was up by 55% to 240 crores versus 155 crores. The export and overseas revenue showed an increase of 107% year-on-year to 739 crores versus 358 crores. Defense revenue is up by massive 95% in the quarter, which is 111 crores versus 57 crores. Raw material consumption increased by 111% year-on-year from 442 to 933 crores. The employee cost has increased by 32% year-on-year from 66 to 87 crores. The other expense has increased by 67% from 159 to 248 crores. We reported an EBITDA of 303 crores against 143 crores, showing an increase of 112%. Interest and finance charges cost is up by 64% from 11.80 crores to 19.41 crores. Depreciation has increased by 11% from 27 to 30 crores. PBT has increased by massive 144% from 104 crores to 254 crores. PAT is increased by 152% from 75 crores to 189 crores. These were the updates for the quarter. Let me now take you through the half-yearly performance. The revenue for the half year is up by 97% year-on-year, that is from 1613 crores to 3182 crores. Realization of domestic explosives increased by 74%, that is from 41405 to 71404 per ton. Revenue from domestic explosives increased by 91%. Initiative systems domestic revenues increased by 34% year-on-year from 180 crores to 241 crores. Coal India as a percentage of sales is 14% in the basket from 16% in the previous year. It has grown by 72% year-on-year, contributing 449 crores. Non-CIL and institutional has grown by massive 191% and stands at 557 crores. Housing and infra has grown by 71% year-on-year, stands at 638 crores. Export and overseas showed an increase of 99% and stands at 1331 crores. Defense has shown a rise of 69%, stands at 175 crores. Raw material cost is up by 119% from 911 to 2000 crores. The employee cost is increased by 21% from 134 to 162 crores. Other expenses have gone up by 68% from 262 to 438 crores. EBITDA is increased by 87% from 380 to 595 crores. Interest and finance has increased by 53% from 22 crores to 34 crores. Depreciation has increased by 16% from 52 crores to 61 crores. PBT, we recorded a PBT of 500 crores compared to 244 crores, an increase of 105%. PAT, we recorded a PAT of 371 crores to 176 crores, which is an increase of 111%. This is all from our side. Now we would be happy to take any questions, comments, or suggestions that you may have. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Sujit Jain from ASK Investment Managers Limited. Please go ahead.
Maniji and team, congratulations on a very strong set of numbers. If you can give us in the guidance, what is the volume growth that you are estimating?
Sir, we have already given a guidance of 15% volume growth for the whole financial year, and we stand by that.
Right. So you expect a higher volume growth in H2, because I believe, at least in domestic, the volume growth was at 11% in H1.
Yes, we are expecting more volumes in the second half. As we are aware, the first half is always have lower demand due to monsoon, and in the second half, the demand is more. So that's why we have the confidence that we should be able to gain 15% volume rise in the whole financial year.
And what has been the volume growth for the exports business in Q2?
The export volumes are also around 15 to 16% year-on-year basis.
Sure. And just to understand this order book that you sell out every quarter, which at the end of this quarter stands at 4,000 crores. This is basically the tonnage that you have in the order book multiplied by the pricing that you refer to, the closing pricing. Is that the correct understanding?
Correct.
Right. And the ammonium nitrate price, if I look at an index such as the Baltic Sea price, that was actually up only 5% YOY, whereas our realizations were up much beyond that in the domestic business in Q2. That was about 74%. So how does that phenomenon work, the movement of prices and translation?
Yeah, if you look at the Baltic freight index is basically for the shipping freight. That's maybe 5%.
But the ammonium nitrate price.
The ammonium nitrate price.
Ammonium nitrate spot price. Yeah.
Yeah, that is indicated by a Ferticon index, and I believe it has gone up substantially compared to last year.
Sure. I will take some of these things offline. Thank you. Thank you so much.
Okay.
Thank you. We have our next question from the line of Amit Dixit from ICICI Securities. Please go ahead. Mr. Amit Dixit, please unmute your line.
Yeah, sorry. Yeah, hi. Good morning, everyone, and thanks for taking my question. First of all, congratulations for a good performance. I have just two questions. The first one is essentially on the EBITDA margin. So if we look at the EBITDA margin, consolidated EBITDA margin has jumped to 19.1% this quarter compared to 17.5% last quarter. Now, while I understand realization has gone significantly up, so going ahead, since the volumes are also giving you support, do you expect to get back to 20 to 22% band in H2? Or is the incremental growth that you mentioned, it is going to come at lower margins? So what would be your EBITDA margin or gross margin guidance for the year?
Yeah, you're correct. As compared to previous quarter, the EBITDA margins have gone up. This is on account of main two reasons. One is you can see from the numbers that the state and overseas revenue has gone up, as well as the defense revenues have gone up. When export increases, so the cost of goods fell, and as a result, other expenses increase, but the depreciation is reflected in the EBITDA margin. Going forward for the year as a whole, we maintain the guidance of 18 to 20%.
Okay, that's helpful. The second question is on the segment-wise. If I look at it, export and defense, and it was mentioned by the MD, his commentary also have done well. Can you let us know the key areas that are working for you and that have prompted the increase in revenue guidance as well from 30 to 50% for the year? Thank you.
Yeah, the revised guidance is based on the better realization in our finished goods prices and the improved sales from our overseas subsidiary, and the defense business has also given an upward trajectory. That's why we have given that in this financial year we will be able to achieve a growth of around 50% instead of 40%.
Sir, I was mentioning, basically the elements of it. So if I look at last quarter, your order book for defense was around 538, 540 crores, if I'm not mistaken. This quarter it has gone up to 888 crores, which is a significant growth. So specifically, what areas in defense are you targeting, and do you expect this order book to grow further as we go by? You expect further order inflow? If you can throw some more light on that, that would be very helpful.
Yeah, as we have been sharing over last couple of investor calls, that our bouquet of products covers variety of offerings for different applications like high energy materials, aeros, propellants, rockets and warheads, and now we have entered into the drone-based ammunition as well. If you look at the current prospect, which we have mentioned in our commentary, that we have received an export order of ammunition which is worth around 300 crores, and we have also shared that RFPs for Pinaka is also likely to come. So one of the RFP is already floated by the government, and we are likely to participate in that. And few more RFPs are likely to come in next couple of months or 1 or 2 quarters. Based on these inputs only, we have said that in this financial year, we are likely to reach around 6,000 crores number. And we have said in the last call also that defense business, we are targeting 750 crores revenue in the next financial year.
Great, sir. That's very helpful. Thank you and all the best.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Kishan from Polar Venture. Please go ahead.
Yeah, good morning. Congratulations on good set of numbers, first of all. I have 2 to 3 questions. Basically, the first question is, how was this Ahmedabad Expo and the company participated into it? And specifically for our company, how beneficial could it be from the long-term perspective?
The Defense Expo at Ahmedabad was quite good. It has demonstrated that our country believes in the capability of Indian establishments, and that is what government has showcased to all the visitors, that Indian companies and all the policymakers are very positive and they want to achieve total Atmanirbhar in defense requirements, and now they want to establish India as an export hub. So from that angle, the Defense Expo was quite good. Variety of visitors were there, and we also participated. We have demonstrated our products in the exhibition. Response was quite good.
My second question is, your domestic revenues have gone down Q on Q, whereas your exports have gone up. Is it a tactical shift that you are trying to do to make the mix towards export a better mix, or is it because of the season the difference has come?
No, this reduction in domestic value compared to the Q1 is only because of the monsoon period, and which is quite normal for our industry.
Okay. And the third question is, in this quarter, I've seen quarter on quarter, the employee costs have gone up substantially, and also the other expenses have gone up. Any particular reason? Just a bookkeeping question.
Yeah, as regards to other expenses, I have spoken in earlier questions that since the expense and overseas revenues have gone up, so as a result, the raw material costing index that come down, and other expenses that is the freight and transportation goes up. And as regards the employee cost, it's on the volume of the business associated to that.
And this forex gain or loss has been considered in the other expenses, or is it in the other income, where it has been shown, if there is any?
Other expenses.
Okay. Thank you. Thank you.
Yeah.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Surbhi Sarawde from Smith Capital. Please go ahead.
Hello. Am I audible?
Yes.
Yes.
Sir, I have just one question, and that is, you have given a revenue growth guidance of 50% for the financial year 23. So, can you give a guidance as to how much the PAT will grow for the year 2023?
The current year, the PAT in the quarter numbers, yeah, if we see the margins, EBITDA margins are around 19.6%. So we maintain the EBITDA margin growth from the range of 18 to 20% for the year FY23.
Okay, and what about PAT, the profit after tax?
That depends, PAT comes after taxation. So normally that should also be in the similar range, 11 to 12%.
Ma'am, actually your voice is breaking. Can you just repeat the last part?
Yeah, as I said, the current PAT in the quarter is 12%, so we maintain a guidance of 11 to 12% for PAT.
11 to 12%. Okay. Okay, ma'am, that's helpful. Okay, that's all.
Thank you. We have our next question from the line of Abhishek Ghosh from DSP Mutual Funds. Please go ahead.
Yeah, thank you so much for the opportunity. Just few questions. Can you just help us understand the pricing trend in the ammonium nitrate in the last couple of months? How has that trended? Hello?
If we see on from last quarter, the prices have marginally come right into a similar level. Around 82.
I'm sorry to interrupt, but you're not very clear.
Hello, can you hear me?
Yes, please go ahead.
Yeah, if we compare the RTF prices on quarter-to-quarter basis, last quarter it was around 83,500 and in this quarter it's around 82,500. So there's not much of a decline in that.
Okay. So largely stable in that range.
Yeah.
And ma'am, one more thing in terms of standalone, we see very sharp improvement in gross margin Q on Q. So is it because of export or there has been some price increase which has happened with a lag? Any thoughts?
We are talking on the standalone numbers.
Yeah, ma'am. Standalone.
So in the standalone also there is significant increase in export sales. So as I've been saying, normally when the export revenue rises, with the increased sales, the freight and forward cost goes up. So other expenses have gone up and raw material prices come down.
There is no element of price action in the domestic customers. I was more trying to understand from that.
Generally what happens, we have been saying in the previous quarters, whenever the raw material prices rise, the pass on of price into the finished goods generally comes with a lag. So since I said that the prices are nearly stagnant in this quarter, so we were able to pass on the prices which was there in last quarter. The lag was present in the last quarter.
Okay. And Manish also spoke about this export order of 300 crores and the RFP for Pinaka. If you can broadly help us understand the nature of this export order, is it largely related to what product and the floated RFP for Pinaka? What are the quantities and the lot tender size that you can see?
Yeah, as you are aware that company always keeps sharing the information as and when things materialize. So we will definitely share this information as and when RFP are finalized. And like I said that government has already floated the RFP and we are likely to participate in next couple of months. And we are hopeful that the commercialization of our key product, say Pinaka, will start from next financial year.
Next financial year, is it?
Yeah, it's 23-24.
Okay. And so the export order of 300 crores, it is executable from when?
Yeah, the likely timeline is next 2 years. So we are likely to commence the production from the Q1 of the next financial year and likely to finish in 12 to 18 months time.
Great. So just one last question. If we look at the revenue mix, and you all have done a great job in getting down the, in diversification and the, coal, particularly Coal India revenues are down to just about 12% of the overall revenue mix. Over a next 2 to 3 year period, any thoughts? How should one expect the contribution from Coal India and how should one look at it given the strong growth in exports?
Yeah, as we all are aware that Coal India has also announced their ambitious plan to raise the production to almost 1 billion ton. So based on those targets, we believe that sales to Coal India will always be in an increasing trend. Whereas if you look at the private coal mines, their growth rate will be much more than the Coal India. As a result, we believe that the sales or the growth in non-Coal India will be more than the sales towards Coal India. And we think that the share of Coal India, which is around say 14-15% on the half yearly number, are likely to remain around 10 to 15%. So it will float, it can fluctuate, but the total as a basket in our overall sales, Coal India will remain around 10 to 15%. It will not cross more than that.
Okay, sir. Thank you so much for this, and wish you all the best. Thank you so much.
Thank you.
Thank you. We have a next question from the line of Ravi Kumar Naredi from Naredi Investment. Please go ahead.
Thank you, Manishji and Solar team for marvelous result. Sir, there was a media clip regarding solar. We are getting 2,000 crore in consortium defense order. What is reality? If yes, how much order we may receive or already received?
Sir, as you are aware, the company always keeps sharing information and as and when things materialize. And based on that, in yesterday's press note and investor update, we have mentioned that we have received an export order of 300 crores, and we have already clarified on this point. Thank you very much.
Okay. And this enhanced net profit margin likely to continue in next financial year?
Yeah, I think that is what we believe, sir, that based on the current elevated raw material prices, we believe that 18 to 20% is a sustainable EBITDA margin, and we maintain on that.
Okay. And sir, this financial year 23, you are giving 50% guidance, and in first half we already achieved 100%. So is it not so conservative guidance?
Sir, as we all are aware that there are variety of challenges in the global economy.
Right.
There are various political tensions going on various sides, higher inflation leading to higher interest rates, and as a result there is huge fluctuation in the currency market. And we can observe there are slowdown in various markets. So after capturing all these inputs, based on our experience, we have given a guidance of around 50%.
Definitely. You are very conservative.
Yeah.
It is good for investor also. And anything you would like to give for next few years about any guidance, financial year 24, 25, anything in your mind? I'm not giving a percentage sum, but anything in your mind if you want to give.
For next financial year, sir, we will come out with our guidance after the Q4 numbers.
Okay. And sir, one question, if you may allow me. These current assets are higher side. In spite of so much handsome profit in H1, our debt rises due to capex and rise in current assets. So will you comment on this development?
Yeah, the current assets has gone up, you have rightly pointed out. This mainly because of the very high raw material prices, and we have to continue with better inventory or higher inventory to maintain any kind of stoppages in the production. As a result, current assets has gone up. Otherwise, there is nothing alarming or drastic change in our overall working capital structure. It is well within the norm which we try to follow of 90 days. It is less than that.
Okay. Thank you very much and all the best, sir, for future.
Thank you, sir. Thank you, Ravi.
Welcome.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Kishan from Polar Venture. Please go ahead.
Yeah, just a few more questions after I've already asked 2 questions. Now, my first question is that in the export market, is the margins higher than the business which we do in the domestic market?
Normally, like we have been saying that the margins in the domestic and overseas are in the same range. It all depends on in which quarter or which month the sales of which sector of products is more. So that's why there is always some kind of fluctuation of 1 or 1.5% on EBITDA margin, which is quite normal for our company, Solar. And we believe that whatever guidance we have given of 18 to 20% is a reasonable guidance, and we should take note of that this is a sustainable number, and we are trying to achieve that.
And related to this, one more question. Basically, the debtor days that we have, is it better in the, domestic market, or is it better in the export market? Does it help us to do the business in a better way by having a better debtor days in the export market?
Yeah, the debtor days in India is always on lower side compared to the international business. As we are all aware that the logistic time from shipping the goods from our factory reaching to the customer will not take less than 60 to 75 days. So based on this kind of the reality, as we are trying to expand our footprint in global markets, and the variety of raw materials are also coming from distant destinations. So if you capture all these reality of sourcing raw material from distant locations, supplying material, key raw material or key intermediates from India to those markets, it takes more time, and as a result, debtor days are always more.
Thank you.
Thank you. We have our next question from the line of Shivang Doshi from Centrum Wealth Management. Please go ahead.
Hello. Good morning, sir. Thank you for the opportunity. One thing I want to first, if you can quantify if at all we have booked any forex loss or gain during the quarter, what would that quantum be?
Mr. Doshi,
your voice is not very good.
right. Can you repeat your question, Mr. Doshi?
Is this audible?
Yes.
Actually, can you quantify, ma'am, what is the forex loss or gain that you have accounted for during?
Yeah, during the previous quarter, we had a forex loss of around 28 crores, and during this quarter, we have registered around 35 crores.
Okay, that is the forex loss that you have registered.
Yeah,
okay.
Yeah.
Secondly, if we indirectly, directly, we try to derive what one is your EBITDA margin. Secondly, I understand that we are not disclosing that, but EBITDA per ton, if we try to calculate it, apparently seems, so we cannot quantify, it apparently seems that year on year, and as well as sequentially, EBITDA per ton has risen considerably. Whether this higher EBITDA per ton is sustainable, or is it only because of the lag effect that sir answered in one of the previous participants' question?
Yeah, as we have said that for the current year, we are maintaining the guidance of 18 to 20% at EBITDA level. And as regards per term, we do not share these information as per our company's policy.
Okay. Further, going ahead, I understand that further guidance will be coming up, but I believe two facilities are going to be operational, like we mentioned in the previous con calls. Australia and Indonesia facilities we were aiming to bring the operations in line from third quarter FY23. Can you give us the status of the same?
Yeah, we'll update our stakeholders as soon as the team gets operational.
But so far, we don't expect any delay.
No.
Okay. So once these facilities come online, South Africa starts becoming PAT positive. In a longer, maybe if we have to take a broader view in the next 3 to 4 years, how much do you expect your volume growth in the export market to be higher than the domestic market?
Yeah, like we have said in our previous call, that the demand of products in India is quite good due to the Coal India and the focus of government on increasing the mining activity. There is a lot of thrust on housing and infrastructure in the country. Similarly, our overseas expansions are materialized in last couple of years, and South Africa, Australia is also started giving the better results than what it was in the last financial year. So we believe that the growth is there in all parts of the globe for us, and based on those, we have said that we are likely to have around 15% volume growth, not only in India but outside India as well.
Okay. But once your new facilities start becoming fully operational, should we expect a faster growth? You don't need to quantify that. I understand that you will be coming up with a proper guidance for next year after a quarter or two. But can we expect accelerated growth in the exports market, or in the overseas market, not exports, in the overseas market versus domestic in the years to come once your facility is operational?
Yeah, like we said that for the next year, we will come out with guidance after Q4 numbers. So we will address to your query during that call.
Sure, sir. Thank you so much, and congratulations once again on a fantastic performance. Thank you. Thank you.
Thank you for
most of my other questions are answered already. Thank you.
Thank you. We have our next question from the line of Pratik Muzumdar from RNL Investment Partners. Please go ahead.
Yeah. Hi. Congratulations for the fantastic set of numbers. I have a couple of short questions. First is, sir, जैसे अपना forex loss है, we are having a forex loss. So I just wanted to ask, do we have a forex hedging policy, or do we have a number where, say like a rupee is depreciating, so every 1 rupee depreciated of rupee impacts our margin either way, positively, negatively. So can you just highlight on this?
Yeah, we do have our forex policies, but as the company has been operating in too many nominees, so since the rising rates by the Federal Reserve, so volatility has been seen at a huge level.
Yeah.
So compared to this, we do have balance sheet hedge in many of our economies.
Mm-hmm. Okay. And secondly, we have seen a rise in interest cost. I think you have highlighted earlier. Can you just highlight what would be the nature of this debt which you have incurred? Is it for a short-term basis, or what is the purpose of it?
Yeah, as a matter of company's policy, we have been maintaining the debt equity around 0.5, lower than 0.5. So we are maintaining that policy.
Okay. And we were also going to consider issue of NCDs also. That was given in the exchange. So any development on that?
Yeah, as per RBI policy, if the company comes under large corporate, so 25% of borrowing has to be through NCD. Okay. So as a result, we have to procure funds through NCD.
Achha. Okay. And my question to Manishji is, we have a huge exposure to mining sector and housing and infra. These are our two big sectors. So in last call, Manishji, you mentioned that mining is doing quite well. And what do you see from here on in Coal India and in private miners also, and also the housing sector?
So like I said, there is a good demand from the mining sector, and there is a huge thrust from the government side to build the top-class infrastructure within our country. So based on these ambitious programs which government is already working on, we believe that growth will be there from mining and housing infrastructure as well. There can be some ups and downs for a month or 2 months, but that should not derail the plan of building the world-class infrastructure in the country.
Okay, sure. As your tagline says, Unnati ke safar par, our company is really doing well. I would like to congratulate once again. Thank you, sir.
Thank you very much from our team.
Yeah.
Thank you. We have our last question from the line of Bharat Gupta from Fair Value Capital. Please go ahead.
Hi, Manishji. Congratulations for the great set of results. A couple of questions, Manishji. First, in regard to the margins as such, so definitely we do know that the company follows a transfer mechanism, and definitely ammonium nitrate prices, though it comes with a lag, but we try to pass it across. And there has been a good amount of improvement which we see going forward in terms of the defense order book which is concerned, and that is a high margin business for us. So don't you think in next 1 to 2 years we can climb up to a more than 20% kind of a margin level, which generally we do have in the past, we have maintained in the past also?
As you said, for the current year, we maintain the margin of 18 to 20%. For next year, looking at the global challenges, the guidance for next year will be given at the end of fourth quarter.
Right. And second question, coming on to the CapEx side, where like we were earlier looking out for capacity enhancements across two of the regions. So where do we stand? Have we finalized the locations, and what kind of a CapEx plans do we have for this year and next year?
Yeah, for the current year, we have a CapEx plan of 450 to 500 crores. And as regards the plans of new setup, we will update the stakeholders as soon as the team materializes.
Sure, ma'am. That's it from my side, and congratulations for a great set of results.
Thank you.
Thank you. I would now like to hand over the call to Mr. Chirag Muchala from Centrum Broking. Please go ahead.
Yeah, thank you to the management for giving us the opportunity to host the call, and thank you to all the participants for your presence. Sir, do you have any closing remarks?
Yeah, sure, Chirag. We being an explosive company, I'm sure to have blasted this conference call with presentation of good numbers. We expect our well-wishers to keep supporting us like this. Thank you.
Thank you. On behalf of Centrum Broking Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your line.